Bitcoin's sitting right on the one line that decides its next big move, and almost nobody's watching it. Today, that line gets tested. Chris here. This is Bitcoin Whale. Let me break it all down for you. Quick status check. Yesterday, Bitcoin was at 63,058. Today, we're at 63,558. Basically flat. No trigger, no change. Yesterday's setup rolls right into today. And yes, my last trade stopped out. Down 1.1 roughly 1.1% off the book. Clean loss, no argument with it. Small, defined, no drama. That's how you're still in the game next month. On the 4-hour, the last few days have been forming what looks like a symmetrical triangle. I'm going to draw both sides of it right in front of you. Nothing taken on faith. Look at what's getting posted on crypto Twitter right now. Bullish takes from people who are long. Bearish takes from people who are short. That's not analysis. That's just dressed up bias. We're not doing that. Let's read the chart. Here's the ceiling. Descending resistance. I'm anchoring right at the cycle peak. That's around 82,479 and pulling it down to the most recent lower high. Watch where this line wants to land. One test doesn't make a level. But this line, price has come back to this resistance more than 5 times and been turned away every single time. I'm marking the clearest rejections right now, so you see exactly what I see. Right now, that line is sitting around 65,245. Write that down. Not a wick through it. A confirmed 4-hour close above 65,245 is what it takes to flip this. Real quick, if this kind of breakdown is useful to you, hit subscribe. I put this together for Bitcoin every single day. Let me flip to the 1-hour for a moment. The 4-hour gives you the map. The 1-hour is where you figure out where to step. On the 1-hour, the range we've been trading has a floor around 61,104 and a ceiling around 67,292. Call it roughly 10% wide. Right now, price is parked near the bottom of that range. The moving averages are telling the same story. EMA 20 at 63,731, EMA 50 at 64,132. Price is under both. That's immediate bearish pressure, plain and simple. On the 1-hour, short-term momentum is pointing down. Okay, back up to the 4-hour. Let me get the second half of this structure in place. Now the floor. Ascending support. Anchoring at the swing low, 59,130, and dragging it up to the most recent higher low. Watch how this thing rises. More than 5 times this floor has been tested, and every single time buyers showed up right here. It's projecting to about 62,715 right now. That's the line in the sand. As long as price holds above it, the bullish structure stays intact. 2 trend lines give you the shape, but 2 lines alone don't give you conviction. The edge comes when you stack another tool on top. So right now, I'm placing a Fibonacci retracement across the same swing. Here's what stands out when I layer these together. Around 63,849, several of my levels are landing in the same zone at the same time. Different methods, same answer. That's Confluence. When you see that, it's not a coincidence. Funds, algos, retail, everyone's looking at the same area. I'm dropping a horizontal right on that cluster so you can see exactly where it sits. Now the bigger picture. This pattern measures about $15,889 from peak to trough. When these break, price tend to travel the full height. That's your structural target, the swing move. I'll walk you through the tighter intraday play in a moment, but this is the direction the measured move points. I've watched these setups unfold a lot. 50, 60 instances maybe, and the data on them is genuinely interesting. About 70% of the time, once the pattern breaks, price completes the full measured move. The direction is basically a coin flip. But if you wait for a real trigger, the size of the move on the other side is real money. Scenario 1, bulls take it. A 4-hour close above 65,245. That's the trigger. Target, 81,134. That's where I'm scaling out. Scenario 2, bears break it down. A 4-hour close under 62,715. Mirror image. Target drops to 46,825. Stop goes just above the level that just cracked. Keep the size small. Scenario 3, and honestly the most probable of the three, neither break prints. Bitcoin just keeps grinding inside this range. And if that's what we get, you're doing absolutely nothing. No trade. When the market's coiling up like this, patience is a position. That's the full framework. One path north, one path south, and a lot of noise in the middle. 3 levels on the chart, and price picks the winner. Not me, not Twitter. You're reacting to triggers, not guessing at direction. Now here's exactly where I'm putting my money today. Long setup on the 1 hour. Let me draw in the entry, stop, and target right now. I'm not buying up here. I want the dip into 63,500 to get long. Stop loss sits at 62,865, just below that level. Price loses it and I step aside, no hesitation. Target is 65,405. Risk reward on this is about 3.0 to 1. And I don't push trades that aren't set up right. If the reward isn't clearly bigger than the risk, I pass. This only triggers on a confirmed close. A wick through doesn't count. Size it at 1% of your account, not your whole stack. If today's breakdown helped you read the chart differently, tap the like button. It genuinely helps the channel keep going. That's my Bitcoin read for today. Stay disciplined out there. Talk soon.